Chapter 11. Who owns the business? Many people think about starting a business the same way they would think about starting to paint the house, starting a new career, or starting any other big project. They think about doing something rather than owning something. Yet, when you start a business, in the eyes of the law, you become a business owner and have to choose a form of business ownership. The form of ownership you choose has important legal, financial, tax, and marketing implications. What forms of ownerships are there? There are three primary forms of business ownership. Sole proprietorship. You are the only owner. Partnership. Two or more parties join together in the business, splitting up the workload, profits, financing of the business however they wish. Corporation. A legal entity which under law has a life of its own separation from individual who owns the company. What are the advantages of a sole proprietorship? As a sole proprietorship is the easiest form of business. A sole proprietorship is the easiest form of business to set up and run. Here are a few of the reasons why. You make all the decisions. You alone can decide what to sell and how to sell it, when to expand the business, and when to pull back, when to look for financing, when to buy new equipment, how long to work, and when to take the day off without having to justify your decisions to anyone. You can take money out of the business easily, although it is not advisable. You don't even have to maintain a separate bank account for a sole proprietorship. As long as you keep accurate records of income and expenses, you could run it out of your personal checkbook. You can use losses to offset other incomes on your personal tax return. Startup costs are relatively low. You generally have less paperwork and fewer regulations with which to comply as a sole proprietor than you do with other forms of business. Are there any disadvantages of owning a sole proprietor? Are there any disadvantage of operating as a sole proprietor? Virtually every book and magazine article discussing what form of business a business owner should choose will tell you the biggest disadvantage of a sole proprietorship is that you have an unlimited liability for the actions of your business. In other words, you are personally responsible for all business debts and actions and could lose your personal assets if the business goes bankrupt or gets sued. But also remember that as an owner of any small business, you are likely to take the same risk no matter what form of business you start. Contrary to what you may read in books and how-to articles, incorporating a very small business does not automatically protect you from liability for the company's debt or actions. Unfortunately, you will still find many books and articles and even an occasional individual with a degree in law or accounting stating that incorporating shields personal assets from liabilities. What they don't bother to explain or perhaps never really investigate is how that protection comes about and how it changes with the size of the business. See page 181 for additional information. Other disadvantages of a sole proprietorship includes there is no continuity of ownership. Usually when the owner of a sole proprietorship dies, the business comes to an end. While you can train someone or take over the business and make arrangements to pass on to the business to a family member, should you die, there may be no one in your family who has the interest or ability to carry on without you. Financing your business may be more difficult. Banks and other lenders be reluctant to loan your unincorporated business money. Fringe benefits you can give yourself are quite limited. The amount you can put tax-free into pension plans and the deductibility of health insurance premiums are both limited, for instance. Getting and keeping good employees may be difficult as the company grows. How does a partnership work? A partnership lets two or more people, or in some cases, businesses, work together to achieve a goal. There are different kinds of partnerships, but each partnership must have at least one general partner. In most very small business partnerships, each partner is a general partner. The partners share in the profits and the work according to an agreed arrangement. Each general partner can act on behalf of the partnership, doing anything necessary to run the business, hire employees, sign contracts, make purchases, etc. What are the disadvantages of a partnership? What are the advantages of a partnership? The chief advantages of a partnership are, it looks cool. Oh my God. It lets you pool resources with others to build a large, more profitable business. The chief advantages of a partnership are, it lets you pool resources with others to build a large, more profitable business. It is easy for the partner to take money out of the business. This is one of the reasons many professional practices use a partnership format. The life of a partnership can be easily limited to suit your needs. Thus, a partnership can be formed for a specific project or to achieve a specific objective and can be dissolved. It may allow you to bring needed capital into the business to finance long-term projects or growth. You may lower costs and fewer legal regulations than you may lower cost and fewer legal regulations than you would running the business as a corporation. The partnership itself does not pay income tax. All profits and losses gets passed along to get the individual partners. What are the disadvantages of operating a partnership? Disadvantages of running your business as a partnership include partners don't always get along. Frequent causes of disagreements are disputes over workloads, who is doing how much, spending. One partner thinks the other is a penny pincher and the other thinks the first is a spendthrift, and methods of operation. Each general partner is liable for the actions of all the other general partners. Thus, if your partner leases a new Mercedes in the partnership's name and then skips town with the car, the partnership and you are personally as a partner, the partnership and you personally as a partner would be responsible for paying for the car. The same holds true if your partner commits the partnership to any contract or does anything illegal in the partnership's name. You may incur more legal fees with a partnership than with a sole proprietorship. Although it isn't always done, it is in your best interest to have formal partnership agreement with your partners and to have the agreement drawn up by an attorney or at least reviewed by one. If you don't have a formal partnership agreement and the partnership ends, you are likely to end up with more legal fees to untangle disputes over partnership debt and assets. Changes in ownership mean the partnership technically comes to an end, dissolves. If a partner is bought out or a new partner is added, however, the business can continue. Fringe benefits, as with sole proprietorships, are limited compared to those available with regular corporations. Does my spouse automatically own part of my business? Depending on the state laws where you live, your spouse may automatically have a legal interest in your business and be entitled to a share of the business if you divorce. This holds true even for partnerships. The partnership's spouse may have a legal interest in the partnership even if he or she has never been involved in the operation of the partnership. What happens if my spouse and I get divorced? Depending on where you live, what precautions you have taken, you might have to buy out your spouse's interest in the business as part of a divorce settlement, even if the spouse never has worked in the business. I'm thinking about going into business with a friend. Are we both sole proprietors? According to the Uniform Partnership, UPA, which is a body of law that establishes basic guidelines for partnerships, a partnership is an association of two or more persons to carry on as co-owners of a business. If you and your friend work together in the business, you would be considered partners, whether you formally agree to be partners or not. That means you would each be bonded by all the rights and responsibilities and liabilities of a formal partnership arrangement. Thus, it would be advisable to have a formal partnership agreement with your friend. Why do we need a partnership agreement? The Uniform Partnership Act, UPA, has been adopted with some variations by all states except Louisiana. While you and your partner may be the best of friends now, it is very easy for misunderstandings to develop in a partnership, just like it is easy for a misunderstanding to develop in any agreement that isn't written down. Several psychologists who were also good friends learned this lesson the hard way. They agreed to open a jointly run practice. They were advised to have a formal partnership agreement, but since they were all experts in dealing with human relationships, they decided it wouldn't be necessary. Less than a year later, their joint efforts ended, leaving them engaged in bitter and expensive legal disputes over ownership of partnership property and responsibilities for various debts. What should a partnership agreement cover? Among the basic points that should be explained in the agreement are the name of the partnership, the function of purpose of the partnership, the duration of the partnership, the duties and extent of authority of each partner, the number and kinds of partners, limited, general, silent, the method for admitting new partners, the method for dissolving the partnership. Should the partners be unable to work together? The contributions, money, labor, etc., equipment, etc., of each partner to the partnership. The method for dividing profits and losses, how the books will be kept, how property used in the partnership will be owned, the method to be used to resolve disputes, how absences from the business or disabilities will be handled, what buyout procedures should be followed in the event that a partner should leave the partnership or die, what happens if we don't have a partnership agreement. If you don't have a partnership agreement, and your partnership breaks up, you have no way of proving any verbal agreements about who contributed to what to the partnership, or whether anything contributed to the partnership became partnership property or remained to the property of the original owner. Thus, any business equipment you brought into the partnership, your computer system, scanner, laser printer, for example, could be considered partnership property that has to be sold to pay the partnership debts or split up between the partners. Do we need an attorney to write the partnership agreement? It is advisable to have an attorney to draw up the partnership agreement. Are these partners who just contribute money and don't get involved with? Are there partners who just contribute money and don't get involved with the business at all? Yes. Usually that kind of arrangement is set up as a limited partnership and specifically spells out when and how and what terms the investor will get back their money. It is frequently used for financing small businesses. Limited partners are not liable for debts or actions of the partnership. The most they can lose is the amount they invest. How does a corporation differ from a partnership? A corporation is a legal person. In other words, it has an identity that is distinct and separate from the individuals who own the corporation. Like a real person, the corporation is legally entitled to enter into contracts, conduct business, own property, lend and borrow money, and so on. What are the disadvantages of incorporating? The primary benefits. What are the advantages of incorporating? The primary benefits of operating under a corporate form generally revolve around tax and marketing considerations and ease of attracting investors. In real life, while the benefits of incorporation may technically be available to a business of any size, in practice, very small businesses may gain little or no benefit by incorporating until they have employees and can reap tax benefits by incorporating. That said, these are the potential benefits of the corporate form of business. You may be able to raise capital more easily as a corporation than a sole proprietorship. However, there are no guarantees. It may be easier to transfer ownership in a corporation than it is in a sole proprietorship or a partnership. Under some circumstances, your tax rate may be lower. If you have employees, incorporation may protect your personal assets if an employee does something that causes the company to be sued. You may be able to give yourself money, more company-paid fringe benefits. You may be able to give yourself more company-paid fringe benefits as an employee of your corporation. You may be able to get and keep good employees by offering them stock in the company. You may gain estate planning benefits. You might find incorporation preferable to a partnership if you will be going into business with one or more other people. What are the disadvantages of incorporating? Among the disadvantages of incorporating are your cost of doing business usually increases due to added fees you have to pay. The amount of paperwork you have to do increases because of legal record-keeping requirements. You may be subject to double taxation, having your profits taxed once at the corporation level and once again as an individual. The IRS could limit your salary as an employee of your own corporation to an amount it considers reasonable and treat amounts above the reasonable salary to be in dividends. Your personal finances must be kept completely separate from the corporation finances. Thus, you can't dip into the corporate bank if you come up a little short on personal cash for the week. Closing the corporation's doors permanently can be somewhat complicated and costly. Banks are going to look for the same thing whether you are incorporated or not, your ability to repay a loan. Being incorporated may make it appear you are more serious about running your business. However, incorporation in no way assures that you will be able to find people to buy shares of the business. Doesn't the corporate form of business protection? Oh my God. Doesn't the corporate form of business protect your personal assets? No, it won't necessarily protect your personal assets. Here's why. Even though you are, as a shareholder of your own corporation, may not be responsible for the debts of the corporation, since the corporation is a separate person, there is nothing to prevent someone from suing you personally for actions you performed. For instance, suppose you personally created an ad campaign for your corporation criticizing the competitor. The competitor views the campaign as malicious and untrue and decides to sue. They might sue your corporation and you personally as the creator of the ad. While you would not be liable for any settlement, the corporation has to pay as a result of the suit. Your personal assets could be attached to pay off any judgment. The competitor won in its case against you, the individual. In addition, even though you might not technically be liable for the corporation's debts, if you owned a very small corporation, chances are you would have to dig into your own personal bankroll to come up with the money to fight the lawsuit. Thus, incorporation does not necessarily prevent liability problems. One important step you can take to help protect your assets against loss is to obtain adequate liability insurance, business property, professional errors and omissions, and product liability. The other fallacy about incorporation is that somehow it protects you from paying off any bad debt the corporation incurs. But things rarely work that way. While you are not automatically responsible for the corporation's debts, the way you would be responsible for your sole proprietorship or partnership debts, rarely will you be able to get a loan for a new small corporation unless you sign a personal guarantee, which means that you personally will have to pay back the loan if the corporation defaults. You may also have to sign personal guarantees on buildings, on equipment, lease agreement. How old do you have to be to incorporate? The minimum age ranges from 18 to 21 depending on the state. Can I start a corporation with only one person? Most states allows you to start a corporation with only one shareholder. When is it a good idea to incorporate? A good accountant who is used to dealing with small businesses Business Tax Matters, can advise you whether or not to incorporate. In general, he or she should help you evaluate whether business growth or other individual business circumstances indicate that incorporating is likely to benefit you by doing any of these things. Cut your tax bill, give you better fringe benefits, increase the amount of money you can put tax-free into your pension plan, make your company appear bigger than it is, allow you to retain money in the corporation to meet some specific need, allow for a smooth transfer of ownership, make it possible to expand the business by bringing in investors. I've heard it's a good idea to incorporate in Delaware because of tax breaks and other benefits. Is this true? As a small business with just a few employees, the easiest and best place to incorporate is usually within your own state. Although Delaware may offer some tax breaks and potentially more statutory protection from liability for corporate directors than your own state, for a small corporation, the advantages are likely to be outweighed by the disadvantages. For instance, you will have to appoint someone in Delaware to be an agent for your corporation. There are companies in Delaware that do this. You will have to pay an annual franchise corporate tax to the state of Delaware. And if you incorporate in Delaware but do business in another state, the state where you live, for instance, you will have to file an application in your home state to do business as a foreign corporation and will then have to pay franchise fee as well as income taxes in your home state. What will it cost to incorporate in my own state? The actual fees charged to incorporate may be anywhere from under $50 to $500, to a few $100, depending on which state you live in. Attorney fees, if you use an attorney to incorporate your business, can run from $400 to $500 to close, to $1,000 or more, depending on where you are located and how much work the attorney has to do for you. Should I incorporate to get investors? If you have people who want to invest, incorporation is one way to set things up so they might be able to get their money out later. A limited partnership might also accomplish your goals, but incorporating won't automatically bring you investors. What kind of corporations are there? There are two basic forms of corporations: regular corporations called a C corporation and S corporations, formerly called subchapter S corporations. Small corporations often organize under the S format. Another term associated with corporations is close and closed, or sometimes closely held. This refers to a corporation that is owned by a few private individuals rather than having its shares available to the general public. What's the difference between C corporations and S corporations? The main difference that is of concern to small businesses is the way profits and losses are handled. In a regular corporation, the profits are taxed to the corporation and losses absorbed by it. In an S corporation, profits and losses are passed through to the shareholders and taxed to the shareholders' tax rate. What type is best? The answer depends on individual circumstances of your business. If the shareholder's personal tax rate is lower than the corporate tax rate, an S corporation may be preferable. Business subject to the alternative minimum tax may find the regular corporation status preferable since the alternate minimum rate is lower for a corporation than for individuals. What type of business does the IRS consider personal service corporations? Corporations offering services primarily in the field of accounting, actuarial science, architecture, engineering, health, law, the performing arts, and consulting are considered personal service corporations. Writers, artists, and sales agents do not fall into this classification. Do I need an attorney or accountant to incorporate? Technically, you could incorporate without outside help, but it is not advisable because of the complexity of corporate law. You should get help and advice from an accountant or attorney, but not just any accountant or attorney. Look for one who has experience dealing with small corporations. Nadine Kyle Holtz, publisher of Sweepstakes Updates newspaper, learned that lesson the hard way, explains Nadine. Before we incorporated, all we had to worry about was a quarterly state sales tax form and payment and a Schedule C along with our personal federal filings. As soon as we incorporated, I started getting forms I'd never heard of from taxing authorities I never even knew existed. I was buried up to my ears in 940s and 941s, state unemployment, state intangible taxes on the value of stock, and above 20 other things. It seemed that every week I got 2 or 3 new forms to fill out, and that doesn't even count the environmental impact statements and other non-tax related things. Unfortunately, the account we had been using was fine for personal taxes and a small personal business. But after about 2 years, when I started getting notices from the IRC, FICA, the state of Florida, etc., that we had unfiled returns and unpaid taxes, I found out that he didn't know how to handle a corporation. The problem Kilholtz eventually discovered was that although the accountant had actually mailed in their tax form and check for payment, he hadn't submitted the proper transmittal forms with the returns. All that money was sitting there with the IRS instead of having been forwarded to FICA or with one state agency instead of having been sent on to another. Kilholtz has since found another accountant and says the peace of mind of just being able to throw all of our receipts, our check register, and the myriad forms that we receive each month into an envelope and send them to him and know that it will be done and done right are well worth his fees. How do I keep corporate minutes? These are companies that sell incorporation kits with fill-in-the-blank forms you can use to record corporate minutes. which are a record of shareholders' meetings. These kits generally have sample articles of incorporations, bylaws, notices of meetings, stock ledger, and transfer ledgers for recording names, addresses of stockholders, and bank stock certificates. A kit put out by a company called Easy Legal Forms is available for under $15 at discount office supply stores. When is it advantageous to form a nonprofit corporation? Nonprofit corporations may offer certain tax advantages to corporations formed for charitable or other kinds of work. They may be eligible for certain grants, research money, reduced postage cost, and other benefits. Directors and executives of the corporations can be paid decent salaries and get reimbursed for expenses. The rules covering nonprofits are even more complex than those covering C or S corporations and should be discussed with an attorney or an accountant familiar with nonprofit management concerns. How do I choose a board of directors? Your board of directors will generally be responsible for determining corporate policy and deciding how to conduct the business. The directors are elected by your stockholders. The corporate officers are chosen by the directors. Thus, if you are the only stockholder, you might appoint yourself director. Then, as director, appoint yourself or whoever else you choose to each of the corporate office positions required by law in your state, generally president, vice president, and treasurer. Unless your state requires different people hold those positions or requires corporations to have more than one director. The bigger you grow your business, the more important your choice of directors. If you are looking for outside capital, investors are likely to want to see your directors and officers are qualified to run the business. If you should have the type of business capable of attracting venture capital, the investors may be also become directors. Can I start the business as a sole proprietor or incorporate later? Yes. In fact, it is often advisable to do that since a sole proprietorship is the easiest form of a business to start. You simply run the business as a sole proprietorship until it grows big enough to warrant the time and expense of incorporating. Can I switch back and forth between a regular corporation and an S Corp? You must incorporate first as a regular C Corp. Then, if the shareholders agree to do so, you may elect S corporation status. If you choose to terminate S status for tax and other reasons, you can do so at any time. However, once you have terminated your S status, you may not elect it again for 5 years. Is there any other way of working with someone else? If you don't want to form a partnership or corporation, the only other way to work with other people or to hire them as employees or retain them under an independent contractor or subcontractor agreement. In either case, though, the individuals are just working in return for money.